Hello and welcome to Halftime Report. Well, it's 12 noon. We're halfway through the trading session. For starters, the bears will feel they're on top today. They pulled back some of the lost ground that we saw yesterday. The Nifty is down roughly around 40 points after rallying close to around 140 points. Second half of trade becomes extremely crucial. Can the Nifty hold on to that 11,800 mark on a closing basis? That's something we'll be looking forward to. I'm Nigel D'Souza, and with me, Ekta Batra. Hey Ekta, good day.
Hi Nigel. Yes, absolutely. I mean, good day maybe for the recovery that we've seen for the mid-cap index at this point in time. So yes, just about lower by around 7 odd points for the mid-cap index. The advanced decline ratio has slipped a little bit, but it's still holding at even keel, so around 1:1. But still not really a great respite which has come in for the Nifty and the Sensex. Let's see whether we manage to pull through above 11,800. Currently just about at 11,791 currently for the Nifty. Specific stocks continue to be in focus. The big volatile trade that we've seen on Jet Airways continues into today's trade as well. So that stock is up around 10 odd percent after declining around 20 odd percent on an intraday basis. So that just gives you a sense in terms of the kind of moves that we're seeing on specific stocks. But let's take you through the top stories and then we'll get chatting about specific stocks. Weekday of trade on the Lal Street, but the market is off the morning lows. Sensex and the Nifty see a cut of 0.3%, dragged by the HDFC Twins, Reliance and ITC. Mid-cap index in the red but outperforms the key indices.
And the globe eyes rising tensions between the United States and Iran. Brent crude jumps nearly 5% overnight, hovers around the $64 per barrel mark.
Wild swings in the Jet Airways stock. The National Company Law Tribunal admits SBI's bankruptcy plea against Jet, tells the resolution professional to try and resolve the matter in 3 months.
And Tata Motors slips after Moody's downgrades JLR's corp credit rating to B1 from Ba3.
The 35th GST Council meet is scheduled later today, reducing the rate for electric vehicles and a fresh proposal for e-ticketing for cinema tickets to curb tax leakages are likely to be on the agenda. Okay, well, time now for our Movers and Shakers segment, and let's kick off the show with Sonal, who joins in on UPL. Well, Sonal, UPL is seeing a bit of a bounce back today after yesterday's volatility.
Oh, absolutely, Ekta, because Deutsche Bank has come out with a note which says that whatever led to the decline in last 2 days in UPL stock price was not because of any fundamental reason, and it is a good time to buy UPL. In fact, they've charted out the reasons which could have caused the fall that we saw in last 2 days. First is the concerns with respect to changes in Mauritius tax laws. Second is the Asian swine fever. I was talking about it yesterday. Third is the tight liquidity condition in the country. Of course, they have a lot of debt of around 28,000 crores in their books. And fourth is the pledged shares of promoters, which may be sold. So these are the 4 concerns, and they have a point-by-point rebuttal to this, to which they say that they do not think that there will be an impact on the company because of changes in the Mauritius tax laws. Secondly, because of the African swine flu, only 1 to 2% of the total revenues will be impacted. And they do not think that there is any question or concern with respect to UPL's repayment capabilities as far as debt is concerned. And majority of the debt is in foreign currency, so that will be taken care of and it will not be impacted by liquidity situation in the country. And lastly, pledged shares is only 0.65% of the total promoter shareholding, which is a very small amount. So they're not really concerned about all these pointers, and that's why they maintain a buy call with a target price of 1,050 rupees per share. Back to you.
Okay, all right, Sonal, thanks so much for that. Well, auto stocks, they remain in focus with 2 brokerage houses. That's UBS and one rating agency, actually. Moody's has downgraded their view on Tata Motors, while UBS, they have downgraded the Maruti stock. Sonia joins us with all those details. Sonia, over to you.
On Maruti, there is a big downgrade that has come in from UBS. They've downgraded the stock to a sell. They've slashed their target price to 5,800 from 8,000 earlier. They've even cut their earnings estimates. FY21 volume growth estimates have been trimmed to 5% from 8%. They say that apart from the usual issues like a demand slowdown, overcapacity, etc., the one thing that is a big risk in FY21 is the fact that Maruti has decided to move away from the diesel segment. So remember, a complete diesel exit is what Maruti has planned, and that continues to be a big risk. That's because UBS believes that there is still a lot of diesel dependence that the growth segments have. So for example, compact sedans, SUVs and MPVs, which are still doing relatively well, have a diesel dependence, so that's the additional negative. For Tata Motors, Moody's has downgraded both JLR as well as Tata Motors standalone business credit rating, and at a time when JLR still has a capex outline for the next 1 year, the fear is that it will be hard for them to raise money at a time when their credit profile has been downgraded. Moody's speaks about the same old problems that Tata Motors has. The leverage will remain elevated. Debt to EBITDA is likely to remain above 5 times for FY20 and 21. Free cash flow will remain negative as well. Apart from that, 3 big issues that Moody's highlights. One is that the Chinese market, on which JLR is very dependent, has seen no recovery at all. 2, there are still issues with respect to, the no-deal Brexit as well as the potential US tariffs, which remain a concern. And the third thing is that the ongoing trends in electrification of vehicles will bring about a lot more capex and investment, which will put more pressure as far as the balance sheet and the P&L is concerned. So that's the reason why Tata Motors is under pressure today.
Okay, well, Sonal now joins in to tell us about Shobha. Thanks, Sonia, for that. Sonal, over to you.
Well, yes, the stock is down in trade today, down around 7% That is because of the block deal that took place in the morning, where around 40 lakh shares were traded at 505 rupees per share. That is around 4.2% of the total equity. Well, who all can sell this? Basically, the promoters hold around 56% stake. Franklin Templeton Mutual Fund holds around 7.46% shares, and Schroeder International Selection Fund also holds around 5.5% stake. So these are the 3 parties that can actually sell or sell the stake from the company. One more alert, that promoter pledge is at around 18.8% of the total promoter shareholding, and promoter pledge is at around 10.5% of the total shareholding. While we do not know who really are the parties to this particular transaction, but these are the points that we should be taking care of. Back to you.
Okay, we're taking care of those points, and you are as well. Thanks so much, Sonal, for joining in and giving us those details. But Ekta, tell us, Oro Pharma, the bad news just doesn't stop. The stock is under pressure even today.
Well, yes, Nigel, the news on Aurobindo now is that the Unit 11 has received a warning letter from the US FDA. Now, remember that Unit 11 had already received an official action indicated status all the way back just a couple of weeks ago in May, along with two other units of theirs, which is Unit 1 and Unit 9. So the probability of something like this happening was already high enough. Now, the thing is that this is an API facility. It contributes to other formulations in terms of supplies as well. So there's definitely going to be a disruption in terms of the future approvals as opposed to the current approvals that Aurobindo has. And the impact could be based on the fact that maybe the other unit also could get impacted eventually. So that's the uncertainty, and that's one of the reasons why the stock is down as well. Now, separately, the uncertainty, like I mentioned, Unit 1 as well as Unit 9, both of them have outstanding OAIs. Whether that escalates or not, that is a fear. Separately, Unit 3, which has received 10 observations, which is a formulation unit, that too could possibly escalate. Nobody knows about that as well. So that again is a fear. So I think there's a culmination of all of the regulatory overhang which is weighing down on the stock. The fact that the debt has increased last quarter despite acquisitions, and that is mainly due to acquisitions, but the fact is that the debt has increased. And separately, they are one of the companies which have been named in the entire US lawsuit with regards to allegations on drug price manipulation and fixing. So I think all of these issues are probably the reason why Aurobindo is down.
Okay, all right, Ekta, thanks so much for that. Well, the other stock that's been very, very volatile in the last couple of days is Jet Airways. Before we go across to Yash, just pull up the intraday chart out there. Today, we had another scenario that played out where the stock, in spite of being in FNO, it opened up down circuit with a cut of around 10%. And then, from around 10:30 a.m., 10:45 a.m. onwards, that's when we saw those circuits getting flexed till the minimum criteria, that is of around 25 trades and 5 unique client codes on either side. That was established, and then in fact now the stock is in a free run. Remember, the stock from the lows has close to have doubled actually in today's trading session. Yash joins in to fill us in with a quick update in terms of Jet Airways. Yash?
Well, absolutely, Nigel. You spoke about volatility. We saw that volatility play out in the stock yesterday as well. but a lot of it has to do with the action at NCLT. It was an important day for Jet Airways as well as the lenders of the company. The NCLT, or the National Company Law Tribunal, admitted State Bank of India's insolvency petition against Jet Airways, which essentially means that the insolvency proceeding against Jet Airways starts with that order itself, which came yesterday. Now, the court has given some important instructions as far as the IRP is concerned, or the insolvency resolution professional. The court has very clearly asked the IRP to find a resolution to Jet Airways situation within 90 days or 3 months, as compared to 180 days, which is mandated by the IBC proceeding. The IRP has also been asked to submit a fortnightly progress report as far as resolution of Jet Airways is concerned. A moratorium period, of course, has been granted for the existing assets of Jet Airways. That is for the period of 180 days. Apart from that, importantly, there was an intervention plea which was also filed by a Netherlands-based company, citing that a similar insolvency proceeding has also been initiated against Jet Airways in Netherlands court. Hence, the IBC proceeding in India should be stopped and the one in Netherlands should continue. That petition has been quashed, it has been dismissed, so there won't be any intervention as far as SBI's plea is concerned. Now, just from this point going forward, all the financial creditors will also put in their claims as far as SBI's main insolvency petition is concerned. So the names like Yes Bank, ICICI Bank, Bank of India, Punjab National Bank would put in their claims in SBI's insolvency petition. Operational creditors will put in their claims. Importantly, the Engineers and the Pilots Association, as operational creditors, would also put in their claims in SBI's main insolvency petition. The next progress report will be submitted on July 5th, and that is when the next hearing for Jet Airways will also happen at the National Company Law Tribunal.
Okay, all right, Yash. Thanks very much for that. In fact, let's quickly recap all of the top buzzing stocks now. We have UPL, Maruti, Tata Motors, Sobha, Aurobindo Pharma and Jet Airways, which is on our radar. And Nigel, you're looking at graphite and HEG. I mean, just the volatility that we've seen in these stocks, they were darlings at one point in time, and it's been a complete fall from grace. What's the reason?
You know, Ekta, and this week itself, both those two stocks are down between 13 to around 14%. They were darlings. I think that'll be a thing of the past. So just looking at the data, actually, that's coming in there. And this month itself, both those two stocks have lost anything between 20 to around 23% odd. It's really a double whammy that's coming in for these graphite stocks. One is graphite electrode prices, they are falling. The second factor is that the input costs, they're not falling. So that's why it's a double whammy in terms of the margin compression that we're likely to see on both these two companies going ahead. Kotak Securities, they had come out with a note. They say that they've checked with a lot of steel companies. And in fact, the second quarter of this fiscal year, that is the July to September quarter, now, you know, the rates are normally fixed 15 days before getting into that quarter. So now those rates would have been fixed. And they say these contracts have been fixed at a discount of around 20 to around 25% odd. They've also given you numbers because you have the, the UHP as well as non-UHP. On UHP, that's the premium, graphite electrodes that they sell. Out there, it's around $8,000 per ton. You know, Ekta, at its peak, this UHP was selling at around $18,000 to $20,000 per ton. So seen in a sharp correction. And non-UHP as well, they are saying it's at around $3,000 to $3,500 per ton. Now that's what Kotak Securities is saying. I reached out to a couple of buyers as well. They're saying it's even happening below $8,000 per ton and below $3,000 per ton. Besides that, they've given the reasons why we're seeing such a sharp slide. One is destocking by steel companies. The second factor is that there are sanctions that have been applied in terms of Iran. Now, both these two companies used to sell closer on 10% of what they produce to Iran. So that as well is the second factor. And the third factor is you use graphite electrodes when you make steel via the EAF facility. Now, a lot of these countries which have EAF-based facilities, Turkey, Europe, USA, out there the production has been cut. So on the back of that, the need for graphite electrodes itself has gone down lower. And the path looks rather rocky going ahead. Why is that? Because steel producers now, they're saying, I don't want to buy it now. I'll buy it in the times to come. The prices may fall more. So that's point number one. Second factor is that they're sitting on a large inventory now. So that's another factor. And then maybe they'll have to take production cuts. This is the graphite electrode makers that were running at full capacity. Suddenly they'll be taking cuts because they are stuck with inventory as well. So it's looking rather rocky going ahead. We'll have to keep an eye on this space. And finally, input cost. The needle coke prices, they are absolutely flat. In the first half of this year, it was $4,500 per ton. Second half of the year, it's been fixed at $4,500 per ton. It's normally a 6-month contract, so no respite for them. Falling graphite electrode prices as well as input costing flattish, not great news at all. And we just thought we'll highlight this note that came in from Kotak Securities.
Actually, very important. So the prices, or the input prices, have fallen all the way from highs of 18,000 to even sub 8,000.
That's the selling price. The selling price has fallen from 18,000. It even went to $20,000 per ton.
At the peak.
At the peak. And from there, you're coming down to $8,000 per ton. And I just checked, I checked with a couple of steel buyers. They are even talking about $7,500, $7,000 per ton. So it's not looking good. And the non-UHP, that is around 25% of what they sell, 20-25% of what they sell. That has come down to around $3,000, $3,500 per ton as per what Kotak says. I've checked up, it's around $2,800, $2,900 per ton as well. And that actually has fallen from a high of around $12,000 to $13,000 per ton. So the fall in the non-UHP has been, far more severe as well.
Okay, well, yes, definitely tough times in terms of at least the prices. Remember, these were the two stocks which really outperformed last year. We'll take